Hey, Steve Saretsky here. As always, the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up and subscribe. I appreciate the support. As always, feel free to banter back and forth in the comments below. Any questions, comments, I'll get to those. Quick little tidbit here before we get into the video. Basically, I've been doing these reports, analyzing the Vancouver real estate market, basically summarizing everything that I've seen for the month, anything that you should be, anything that's important that you should be watching. Basically, the Saretsky report. If you want access to that, there'll be a link below where you basically just fill in your email and then you can access that report. I think you'll find it quite worthwhile. As I mentioned last week, the Vancouver real estate market, obviously we've seen sales really slow down, but what does that mean? We're going to do a little bit of a deeper dive into that and then get into some of the recent mortgage changes, what we're seeing in that space, as well as some of the employment numbers in the Canadian economy, which were really recently released. So Vancouver condo sales, first and foremost, to start off, those sales dropped 28%. Falling to a 5-year low in the city of Vancouver for the month of May. With that, simultaneously, so sales fell 28%. The inventory also increased by 28%. So you have sales going this way and you have inventory going the other way. And so that will be an interesting trend to watch moving forward. With that trend, make no mistake, the condo inventory levels are still extremely low. But over the last 2, 3, 4 years, the trend has been down. Inventory has just kept falling. And of course, when you have no supply and a lot of buyers, that creates bidding wars and higher prices. And like as we are seeing now, we're seeing sales falling now down at 5-year lows, and we're seeing inventory finally reverse and start to trend upwards. So that's going to be an important trend, particularly considering you have new housing construction at a record high, and you have new housing starts also at record high. So there's a pipeline of new supply coming for the next 2 or 3 years that is getting built, whether we like it or not. That stuff is coming, and I would argue that it's coming at a time when demand is clearly starting to slip. So we'll keep an eye on that. Switching over to the detached market, sales declined by 39% on a year-over-year basis, falling to a 27-year low for the month of May. I mean, that's been the same trend basically for all of 2018. This really is no different. There hasn't been any sort of uptick, any change. It's just a continuous, nobody's willing to pull the trigger on a detached house. Inventory climbed to its highest point since October of 2012. Obviously, if you looked at the 2012 numbers, that was a particularly weak year for Vancouver real estate, right? So, how did we get the inventory back up to 2012? Everybody talks about supply, but as we've seen, sometimes all it takes is a huge knock on demand, sales and buyer demand to basically dry up, and that pushes the inventory right up. I would argue we haven't really built any more single family homes, and so that'll be, it's interesting. Like I said, I've been a firm believer that supply is going to help here moving forward, particularly in the condo market. Obviously we do have growing population, but at the end of the day, it's a lot of this. If you want more affordable house price or lower house prices, a lot of that you have to tackle that demand side, and that's why we're seeing in the detached space prices down from the peak about 15%, again depending on the area. And it's interesting because the real estate board released their MLS benchmark price, which is basically what they publish, and then the media picks it up, and then the media creates the headline, and the typical person reads the headline and says, oh look, the benchmark showed a 1.5% decline in home prices. That's nothing, big deal, I don't have to worry about it. I'm going to keep my price as it is today, even though your home isn't selling. And, but then if you go and take the Vancouver median sales price, it's showing a 12.5% drop year over year. And again, if you go and look at any sort of comps, if you're actually active in the market, most realtors, again, will probably tell you that prices in the detached space are off about 15%. Again, depending on your area, but I would say for Vancouver, that's pretty true and throughout the market. You know, it's funny that a well-known realtor in West Vancouver is talking with, you know, I'm going to leave his name out for obvious reasons, but he's like, God, like that real estate board, man, they published the benchmark and it's showing a 1% decline year over year, and here I am trying to go to my sellers and get all these price reductions. So you know, I think the public has been somewhat misled or fooled into thinking that, you know, the benchmark is the be all end all. And you know, if we take all, I just think that you need that transparency. And it's unfortunate that people are basically going to read the headline. I really wish the real estate board would start to take and paint the entire picture and say, yes, this is the benchmark, but this is kind of what's really happening. Because, you know, as real estate professionals, you look at it and it's like, there's no question, if you take all of these sales across the detached space, the condo space, the townhouse space, across all property segments, real estate sales volumes are down to a 17-year low. And so if you want sales volumes to start picking up, you basically have to get sellers to start reducing their prices. And that's not going to happen if you're going out there and telling them that prices are just keep going up and up and up, because that's like the same thing that keeps getting reported. So again, we'll keep an eye on that, but I've talked about the Phoenix example before. And this really leads us into a lot of the slowdown coming from these new mortgage regulations. We knew that CIBC last week said that they expect new mortgage originations to fall by 50%. RBC Capital Markets also basically echoed the same message this week, saying that they're expecting new mortgage loan growth to slow from 5.3% down to around a range of 2 to 3% over the next couple years. So clearly CIBC and RBC see the writing on the wall for new mortgage originations. I mean, gosh, if you don't get those originations to pick up somehow, it's hard to see how that's going to be bullish for the market moving forward, unless that's a pick up in the huge alternative lender space, which if you look at loan to incomes above 450%, which is basically risky borrowers, those numbers are starting to decline, which suggests that those buyers are either moving out of the market entirely, getting pushed out from the mortgage rules, or they're entering up in the private lending space. And if they are entering up in the private lending space, we could have a bigger issue on our hands moving forward. I mean, the private lending space, if you've actually looked at it, studied it, and spoken with people that are running these companies, it's really a business model that flourishes and is almost predicated on higher home prices. If you think about it, anyone that's going to a private lender and borrowing a first mortgage at say 8% on a 1-year term, the ultimate goal is not to be stuck paying 8% for the next 3, 4, 5 years. The ultimate goal is to pay 8%, get yourself in the property market, and then transition to a more traditional loan with one of the banks at say 3 or 4% mortgage rate. But again, if your house, if you take on a private loan at 8% today, and then 12 months later the house price is actually lower a year later, or credit gets even tighter in a year, you're never going to roll out. I mean, if you couldn't get approved today at one of the banks, what makes you think a year from now you're going to get approved by one of the banks? Unless your income increases significantly or your home price increases, it's almost, I would say, most likely that you're not going to be rolling that loan into more traditional loans. You're going to be stuck paying 8 or 9% or whatever you're paying, and it's ultimately is like, how long can those borrowers afford to pay that? And so that then becomes an issue for these private guys, where if they can't roll that loan off their books, then they have to basically start a foreclosure process, which becomes very, very expensive. So again, that's another space that we'll obviously be watching moving forward, talking about sort of the nationwide dependence on real estate and construction that has been the driver of the economy. Starting to see some of these changes, not only with mortgage rules, slowing sales, that the slowdown in the construction sector is starting to impact or starting to reflect in the numbers. April job numbers show a 18,000 decline in the construction space, the number of workers employed in the construction space, and then in May it fell again by 13,000 construction workers. So that space is starting to see fewer and fewer employed in that space. Obviously, you can see in Vancouver with cumulative sales down to a 17-year low. I believe that on a national scale, home sales are down around 5-year lows last I checked, something like that. So that ultimately is going to impact, right? That's realtor commissions. I think I was running the numbers. If you took, based on the dollar volume spent in Vancouver real estate for detached homes, I believe it was a $19 million less in May that realtors would have earned on commissions. 19 million based on the dollar volume. So that's going to start to impact some wallets here, right? And it's not just the realtors. Maybe that realtor doesn't go to out for dinner this weekend, etc. So these are all things in the bigger picture that you have to watch, because real estate, as real estate goes, so too does the economy. So that's about it for this week. If you have any questions, comments, as always, feel free. We'll banter back and forth. Otherwise, see you next week.